I'm not coming across as something I'm not. I'm just telling them exactly where I'm headed. They can jump on. And I think that the better you are at being the most relatable person that's trustable, understandable, will accelerate your growth faster than anything else.
Tim is one of the most authentic and genuine people I've ever met.
Sincerely believe he's coming from a position of giving, and that means a lot.
You're going to make huge progress.
I'm super excited about this one. I actually met Patrick through Javier Hinojo's Billionaire Boardroom Mastermind. And if you guys haven't heard about that, make sure you hit up Javier about that. He does that mastermind every 3 months. And we just had one, I guess, a few weeks ago in Guanajuato, Mexico. And that was a lot of fun. Yes.
I'm still struggling to pronounce it myself.
It was all the tequila shots you had, Patrick. You needed tequila shots. There you go.
Yes. And so yeah, that's why I met Patrick. He shared his presentation. I was so impressed, like how he looks at capital raising, how he looks at client journey, taking them from someone that's cold, brand new to someone that's going to invest money with him. And so I'm super excited to interview Patrick today. Patrick is the founding CEO of investonmainstreet.com, a private equity firm with a mission to enhance busy professionals' quality of life by providing tax-shielded and inflation-hedged passive investments. He has over 15 years of experience in active real estate investment, purchasing distressed assets, renovating, stabilizing for long-term cash flow. His company's 400 million plus portfolio includes over 3,000 units in multifamily apartments communities in emerging markets across the Texas and southeastern United States. Patrick is the co-author of the Amazon #1 bestselling book, Persistence, Pivots, and Game Changers. And he writes articles on investing in commercial real estate for Forbes and Inman. Yeah, he has an MBA, all the good stuff that Patrick does. And so Patrick, welcome, buddy.
Yeah, it's good to be here. I appreciate you having me on. I really enjoyed your energy and getting to know you in Guanajuato, Mexico. And it's interesting because I met Javier when he came out to visit in Hawaii, and we had such a good time and hit it off. But your whole group, I know Badri, Trevor, and you two, I really don't have a lot of exposure to your group, so it's a lot of new faces. I'm used to seeing a little more than usual.
That's awesome. Yeah, we have a super good group. A lot of very high caliber operators, syndicators, fund managers here in this group. So, all right. So Patrick, share with us. I know you used to be a single family home guy. Give us a little bit of your journey on how you got into multifamily and how you got into raising big money for your deals.
Well, yeah. So I started out, and if anybody wants to read the story, you can hop over to my website. We actually we'll ship you a free copy of this book here, that Persistence, Pivots, and Game Changers. It tells, I've got a wig on. But it does tell you the whole story about my journey and where I came from. But I did the high-tech thing, machine design, automation, and robotics as an engineer. And that turned into a job that produced enough income to start investing. I got some advice early on to invest as much as I can and as soon as I can into real estate. And that guy is still investing with me today, but it's been a long road. Our first investment was residential pre-development in 2007, and that crashed hard, and I was personally guaranteed. So I had to start over and pay dearly and hard to crawl out of that hole after the '08 bust. So I started much lower risk path, which was buying smaller assets, single family homes in recession resilient markets like Houston, ones that needed a measurable improvement renovation to then refi and then hold. And so I started doing that, and it was working great, but I was still doing high tech. I was moonlighting single family. And then that's when I met my wife and realized I gotta trade up to multifamily. And that's what got me down the multifamily path.
Very cool. Now, did you, in terms of when you switch over to multifamily, did you join a group? Did you like what was that progression like?
Well, so you claim to be friends with one of the guys that originally sparked my interest down that path, Dave Lindahl.
Okay, yeah, we interviewed him last couple weeks ago, actually.
Yeah, so actually on my bucket list is to meet that guy. But I read his book. Well, so I run every morning. Newport Beach here, it's out on the beach, on the sand, and I'm listening to podcasts or thought leadership, and I've been doing that since college. So I was referred to his Multifamily Millions book, and that book was the first. Oh, you can buy non-recourse debt. Oh, the Holy Trinity. You can, he started going through the economies of scale and that you could partner up. And that kind of got my mind thinking. It was a number of years later before I ran across Michael Blanc's podcast, where it was literally an engineer, Michael, who was able to do it himself. And I think through that podcast, it really started sparking me into action until one day I just swore off single family and I said, I'm cutting it off. My wife was there for the very last closing. And I didn't join Michael Blanc's coaching. I joined his mastermind Slack channel that came free with his ultimate guide. And I studied that like I was back in college again, doing another master's degree, and met with a ton of guys, good people. And then I didn't join a coaching program until I went to a Rock Creek event. And then I did join their coaching. We were pretty far along down the path, but that did help to accelerate things.
That's awesome. And I know you raise money almost exclusively through accredited investors. How much would you say you have raised so far?
Well, after my first experience, that tanking in real estate, I was very timid to work with other people. And it took me about 2.5 years to get into the multifamily space. I chose not to go the typical path of calling mom, dad, and my best friends. I chose to just go for very successful people I'd met either in the high-tech space or in that I'd known had bought company stock and had done well, and accredited investors only with 100,000 minimums. And I started that way and I stayed that way. And it slowed the pace and I had to leave a lot of people behind that were rooting me on. But I felt better about that. I felt better about the accreditation, meaning that they either had income to support it or their net worth was at least 10 times my investment. And there was some safety net there. The sophistication was there. And I'm really glad that I made that decision early on. And yeah, at this point, I think I think last time I looked, it was 34, but with this diversified energy portfolio we're working on, I've got to be approaching 40 million.
Gotcha. Okay. So just so I'm clear, so when you did your development, were you raising money or were you using like private money lenders for your development back then? So
I put up everything. It was all myself, personally guaranteed, but then I did have 2 friends from college throw in on it. And gotcha. That's when I got that kind of, I don't need to use other people's money. I can do this all myself, and then it wasn't until multifamily came around that I felt like I could start bringing on other people's capital.
Gotcha. I understand. What would you, so starting out raising money from accredited investors, what was your biggest challenge at that time?
Well, so I started out the business wanting I started the business being syndicators, finding deals, underwriting deals, traveling all over, being the analytical engineer. The numbers came pretty easily. And so I started hitting it hard. And it wasn't until a year and a half or so, it was like 2.5 years from the day that I said, hey, this is what I'm going to do, to actually getting there. And it wasn't until I would say at least 2 years in that I started really warming up to the fact that, hey, I don't have to do everything, right? It's a private equity group that people can specialize in different things. And I had been doing everything for my entire real estate career. I'd been finding the deals. I'd been working to manage the construction of the deals and trying to property manage. I'd been trying to do it all. And then I started realizing, hey, there's other people that do different things. And so I went from the deal finder until finally a syndicator's like, hey, let's work together. Experienced guy, because I was only looking for large. This was my first deal was an 86 unit. I went from a single family home to 86 units. And so I went straight to that. And then the guy goes, you know what? We actually have basically everything covered, but you've been showing up to the plate for so long, bringing great deals and looking at, let's just work on this and see where you fit. And so there was no, you have to raise this amount of money or you're a capital raiser. It was just, can you do the debt? Can you do the due diligence? Can you fly here, fly there, and check stuff out? And can you help with the underwriting? And so I just did everything that came up, and I raised just under $750,000, but it didn't even matter. He didn't need the capital. He needed his nights and weekends back, and he needed somebody that he could trust to do it. And it was interesting that is actually how I got drawn in to the space. And so the capital raising wasn't a high pressure cooker thing. And still to this day, I do lots of other things like KP deals, sign on loans, and I've done the deck for every single deal. I fly around constantly looking at deals, doing due diligence. So one of the things that I do is capital raising. But early on, we started with call it people that had known me, but all had been professionally linked, not people I hang out and literally no family. And then after that first deal, I was already flying out to the due diligence for the second. And then same thing, it would happen. The third happened kind of in parallel. And then it just kept going because I showed up to the plate, and almost doubled the capital raise. I think I doubled the capital raise on the second. And then the third was not quite double, but it just, kept compounding and started getting my name out there.
That's awesome. What would you say are your top 3 ways of finding these accredited investors?
Top 3 ways?
Mm-hmm.
Well, so I presented a little bit on that. I think that the best way to do it is by getting yourself out there as a thought leader. And if you jump on my website, you'll see I've written a bunch of articles for Forbes. I'm doing podcasts and webinars just like this. I did just in the last, couple months, I was at Michael Blanc's Dealmaker Live. I spoke on economics at the JOB Network conference in Chicago. I spoke on wealth building strategies in Seattle at the MFIN. And then I was at Javier's. And wouldn't you know it, in this diversified energy portfolio we launched, there's an investor that saw me speak at every single one of those events, investing in that deal. And not just in this deal, they compound, right? Because I take it back. It was actually so there was another event in San Diego that I spoke at. I can't remember the name of it, but I saw the daughter of, I don't even know the daughter, who that was, but she told her mom about me, and her mom's invested in 4 deals now with me. So I honestly think that getting out there, speaking in front of people, telling your story establishes you a little. Of course, you got to have something to say, and it takes a lot of work. You just don't come up with something to say overnight. I do a lot of research. There's the Newport Beach libraries across the street. When I'm working on Forbes articles, I'm in there like phones off in the library, just trying to, do the research and get something that's meaningful. But, I think that the best way to do it is to get out there and put yourself on the stage, get something to say that people want to hear, and put yourself in an authority position. Okay. That's the number one, right? Okay. So there's a number of podcast services that you can purchase. Like there's one, if you want to message me, I can probably try and forward you one, but a couple out that if you pay like $4,000 or $10,000, they'll get you on podcasts. And so I'm actually a subscriber of one of those. So they're just kind of cranking out podcasts. And what I think I started out was just grinding it out one-on-one, which is how everybody starts, kind of. And then you kind of do one to many to the point where now, and I'd say probably the second best way would be kind of, so you've got publications, right? Which are the articles. And then you've got, and then books. Like when you go to my website and you say, hey, if you want to set up a call, we'll give you a free copy of our Amazon #1 bestseller. And on it, you have Russell Gray from the Real Estate Guys, and Phil Collins from Def Leppard, NFL, NBA entrepreneurs. putting yourself, and I don't get the royalties for this, but I was able to jump into this book and I wrote a chapter in it. But having a hard book, probably the second best way, because I have a case of these at a distributor. And has anybody got one of these books for me? Nobody yet. So I have a case of these at a distributor, and it's literally a couple dollars for them to use media mail to ship it anywhere in the United States. And that definitely separates me separately. And then social media, obviously Trevor's like the magician at that. So I don't want to say that I'm good at social media. I actually set up a meeting with Trevor, asking him and Javier. I was just asking him the other day because he did a quote card with me on it. And I'm like, I don't have a quote card out there. And he's got a quote card of me. Like, what the heck?
Yeah,
That's awesome.
I was like, that was the most honoring day. But I honestly, so we have a social media presence, and it takes a long time to actually get that going. But as we talked about, I mean, if you wanted me to share some of the slides that I showed you before, but every time I do a talk, every time I do a podcast, we create our own graphics. So, because what you want to do is you want to show yourself next to whomever this thought leader is, right? And you want to show a topic, not necessarily their topic of the event, the speaking engagement, or the podcast, but you want to show a topic that will resonate with your audience. What of that discussion do you want your audience to learn about you or know about you? So we create our own custom graphics, and they position ourselves next to other thought leaders. And then we put those on our Facebook. And then when somebody clicks on it, it actually goes to our page, not their podcast. And then we put the video and the audio and a transcript. And that keeps them funneling back to our site, keeps them in our thought leadership. And then the next thing that comes up isn't another one of their podcasts with another leader. It's another one of our content pieces. And once they get to our website, then we use Facebook pixels. And Facebook pixels, pretty much the majority of it is retargeting. So if you've ever come to our website once, we'll remind you of us through Facebook. It's really the retargeting is probably the other way.
Yeah. And I know, like, I mean, I don't know if the people listening in actually caught, your process that you go through this, but you have such a thorough, like, thought out process. And one of the things that you had mentioned, like, not only do you take them specifically to your website, but even your video player, you don't upload it onto your YouTube video player. You use Vimeo, correct? So that way, like, you keep them on your page. They don't go off onto another YouTube video somewhere.
Yeah, I'll spend money in overhead to keep the traffic coming my way. We keep upgrading our Vimeo account because we're putting just hours and hours and hours of high dev video up there, and we're paying for it. And so one way to do it is to do it for free off YouTube. But YouTube's entire algorithm is if they see keywords in a video that you like, it's to give you somebody else's content after that. That's similar to trail. They're incentivized to trail them away from you. And so, yeah, we most certainly do that. And not only that, and sometimes we do this and sometimes we don't, but if it's a deal specific video because we upload all our webinar presentations to our site, a lot of guys use YouTube for that. But at the end of those videos, sometimes we'll have an invest now button. So it not only doesn't take them off some trail, but they're like to the invest now button, and Vimeo allows you to do that. And it's pretty amazing.
Yeah, definitely. You guys make sure you go to Patrick's website and just watch the way he does everything. It's very, very well thought out. Now, Patrick, with one of your strategies being speaking on stages and podcasts, what would you say is the percentage of your investors who are also GPs themselves, also syndicators themselves, versus the ones that are purely just passive investors?
Of my investors, less than 5 or 10% are GP in deals. In fact, I kind of focus all of my marketing to stay away from training from the syndicators how to syndicate, because that's a saturated market. There's a lot of people out there trying to sell coaching programs and trying to target and draw people into those funnels. And those funnels are incredibly profitable. You can do a setter. you can hire a setter and a closer and give them 25, 50% of the proceeds, and they'll just sell your coaching package all day long. And they'll just pocket like 5 of the 20 grand or whatever it is. You can't compete with that in a multifamily deal. If you're raising $100,000, you don't get 5 grand out of that. That's not how the acquisition. Maybe you get 2 or 300 after your overhead of your company, or maybe you get at max 1 or 2,000 after you paid everything to float the deal. So there just really isn't that. But so if you're in the coaching space, or you're not trying to get out there in front of the groups that are speaking to other syndicators, you're competing in a space for people that are going to ask a lot of questions, that are not really going to be passive. And there's somebody else getting paid a huge amount of money to feed all of that and answer all those questions. And so it's really not the better model.
Gotcha. Okay. So even though you're doing these speaking engagements and stuff, I would assume like a lot of, like, for example, on this call, right? A lot of people on here are syndicators themselves. So I'm thinking that a lot of events that you go to speak at also have a lot of syndicators, but it seems that your message is getting through, or getting past the syndicators straight through to the passive investors themselves. Does that make sense what I'm trying to say?
Yeah. Well, it's inevitable that you're going to end up speaking with guys like yourself. And I actually, part of what I love about multifamily is that it's a win-win-win, right? Because you get to do great things for your tenants. You get to cleaner, safer, and improved living experience. And I really believe in that. Cleaner, we make them safer, and it is an improved living experience. You get, for the investors, you're providing returns that are incredible, right? That, high risk adjusted, very, very recession resilient and tax advantaged. It's better product for their life than their financial planner can do. But we get to do it in this amazing community of people, right? And we get to meet and experience. So of course I'm out there talking to individuals and enjoying this kind of abundance mindset, and chatting with and showing up at Javier's boardroom and just opening up the box and sharing every last little secret of, like, the flow charts and everything of how I'm making things work, because there's a lot of accredited investors out there, and I don't mind teaming up with good people and helping out along the way. But yeah, it turns out even when you do that, people will respect that and come at and potentially invest with you, or invite you on a stage where you might meet another investor. And that's kind of how some of the invitations have happened so far.
Gotcha. Okay. And so, once someone gets into your funnel, I know you have your articles that you're writing, videos that you're putting out. Any other things that are perhaps might be unique that you don't see others doing out there to maintain that relationship? Yeah,
well, I think we have, I was actually at a mastermind here at Newport Beach out on the harbor earlier this week. And other than the fact that we do a pretty good job of getting, out there and in front of them and showing this, we do follow up with them. And it's a little bit potentially more aggressive, because if you opt in on our website, we do require the phone number. We say proceed with or without consent to call, but if they say consent, then we give them a call, right? And we set up a meeting, or we set a follow-up, or we send them articles specifically to their journey on what they're interested in. And then if they would like to set up a meeting with me, we set up a meeting. When we have another call, then we make more calls, and we have like kind of a communication flow chart. It's a little more interactive, and you can certainly opt out of it. But I'd say that's probably one of the things that I don't see a lot of people doing. They don't have a lot of those systems and processes and kind of flow charts in place, and the staff kind of necessary and friendly enough to be able to not show up, hey, it's a cold call. Nope, you just opted in. And so we just want to make sure we're providing you the value. You actually said that you were consenting to a call. So what can we do? Where are you at? That kind of stuff. I think that's really important, and contributing to their journey, even if they're not a good fit, right? We don't say, oh, okay, forget it. We'll leave them on there and say sometime maybe in the future, if you come around, and we'd be happy. But at the same time, we've got to vet them. We've got to make sure that they're accredited. We got to make sure that they're liquid, because that's all we do. We only do accredited and liquid.
Gotcha. All right. What are some of your favorite software or resources that that you use often in your business?
So yeah, everybody probably should write this one down because this was a total game changer for us. It was Glock apps, and because the reality is your social media can be hijacked at any time. One of the only really values you have is your email list, and kind of what I was just saying earlier, I'm saying is also a phone list, right? Because turns out 90% of phone text messages are actually looked at. A small fraction thereof of emails are. And there's a lot of laws around text messages. So this is a smaller subset of your list that you're allowed to text message to if you have the proper opt-ins and that don't opt out. So you have to have email. And one of the things about email is it is the most difficult thing to get your emails to go through in this business. I don't know if you guys have ever actually tracked open rates and done a Glock Apps test on your email list. But if you write an email, like just before you're about to send it, blast it out to your list, and instead just send it to the 40 emails that Glock Apps gives you and put a code in your email and send that out. They're going to give you the worst report card. You're going to cry because they're going to be like, well, it went to these spam folders, these promotion folders of the biggest ISPs in the whole world. It didn't even show up to this one. Your images are not compressed. You have all these HTML errors. You're using dollar signs. You're using investment. You're using opportunity. And you're never going to, and you're blacklisted on these IPs. There's no way to get rid of those, but you can try and call Active Campaign or whatever. So it'll literally give you this forensic. Yeah, somebody just dropped in the chat. Yeah, so that right there completely changed the culture of our company, because every single email for a while, we were literally like, oh, we'd write an email, and then it had to be a process because one day strategy call became a spam word, and so the entire world of email marketing is trying to prevent precisely the content that we're trying to get out. And that's investment opportunities, wire your funds, great deal, hurry, urgency, all these things. You're going to have to get real creative at writing a completely blah email without any of that content, but still conveying that they need to quickly wire the funds because the deal is filling up and it's an investment opportunity with this dollar sign, monthly passive income, and financial freedom. If you put financial freedom, you're totally effed. And it's just, so it's really interesting. So that's probably the one that changed our life a lot. And so then the demarc, then that'll teach you a lot of things, because there's ways to then whitelist and demarc your record, your emails, and everything like that. But you got to really protect that. Then we use Active Campaign in Zoho, Active Campaign for sending emails, and Zoho for CRM. But I don't think you need to use both. I just think we started with Active Campaign. It just wasn't beefy enough, so we switched to Zoho. If you can get Zoho working early on, then you're probably better off. Some other people use HubSpot, and they're really big fans of it. We use Zapier, and I think it's called Make. That is the new version that's like 1/10 the price of Zapier. I think it's called Make. If somebody wants to know that one, message me back. But that allows us to integrate everything. Calendly, our calendars. So when somebody opts in for one of our webinars, from our webpage, it zaps it over to Active Campaign, and zaps it over to Zoho, and then it zaps it over to our email server, and then creates a automated calendar invite so that it shows up on their calendar, and it generates a custom join link. So they just click right into it. We've got tons of automations like that set up, and it automatically sends a message to one of our callers to say, hey, check these guys. Do we know them? If we haven't met them before, let's give them a ring, see where they're at, that kind of stuff. We use Slack to communicate with our entire company. Slack. Does anybody use Slack?
Mm-hmm. Yeah, I think it's pretty common in our space. A lot of people in our space use Slack. Yeah. All right, that's really good stuff. Talking about email deliveries things. One of the things that you mentioned, not on this call, but in the past, was about how you train you and your staff to not use lingos, things like IRR and COC and all of that stuff. So expand into that, because that's a very common practice that a lot of syndicators, capital raisers use these terms when we're talking to prospects, passive investors. And yeah, can you share your thoughts into that?
Yeah, so this was, I think, the quote card that Javier put together, because I said the investors don't invest with the smartest person in the room, which is usually Javier. they invest with the most relatable person in the room, which is Tim. And I'm off to the side somewhere. So basically, it's the idea is that everybody in this space gets real excited. They're learning this new jargon. They're like, oh, we have this cash on cash return, IRR. Oh, that stands for internal rate of return. Oh, it's better than average annual return for some reason. This is multifamily. What the heck is multifamily? It's not single family. Well, what the heck is single family? You mean like a rental property, right? And we have very conservative underwriting. Well, what the hell is that? What is underwriting? So people, they have no idea. So you've got to really convert your entire mentality of your communication down to what are you trying to say by conservative underwriting? Well, how we manage risk is, right? And when you talk about conservative financing, maybe tell a story. Say, well, we have a strong foundation because the way that we put together our loan is make it real relatable and understandable. And we kind of have this like proverbial dollar in the bucket, and we keep challenging each other all the time, and we're constantly reinventing risk-adjusted returns. We had that on everything. What the heck does that mean? If you can't explain this to your grandma's sister, your grandma and her sister, in a way where they are going to get 100% of the entire thing, and it's obvious by the time you're done, then you need to adjust your messaging. And that right there has just completely revolutionized. And it is not, there are very, very few people, maybe a couple of family offices and hedge funds, typically people from New York. I don't know if you guys are on the phone right now, but where they get on the phone and they only want to talk jargon, and they're frustrated because I'm not getting to the point and getting it out in the most high technical way possible, right? But for the most part, most of the investors, they appreciate just having something so straightforward that it's very simple. And they don't even know, like, they'll read down the emails and they'll understand everything, and they'll be drawn into that. They'll read down your competitor's email and be like, I don't understand 3/4 of this stuff. Let me defer this decision until I do. Maybe I should go read a book, or until they read my email, which is very understandable. And then they just feel comfortable and invest. So that has been a big game changer for us.
Gotcha. So at what point in the, I guess, capital raise or in the conversation with the passive investors can you use terms like IRR?
Well, so obviously we're talking about relationship building. So if you show up and you're throwing out a bunch of jargon, then there's going to be a gap between you and the rapport. So this isn't complex, right? You want to speak the way they speak and model the way that they're talking and come from their understanding level, right? So if you're talking to somebody that understands IRR, they may think they do, they don't likely do. But even if they do, if you want to start using it, make them feel stronger, build up their confidence, build a rapport between them. That's really what this is all about. It's nothing that I invented. I'm just trying to make that bridge between understanding, communication, and trust very easy, right? But like I said, some people want to spit out a bunch of jargon, and they think it's really fun and cool. You got to do that with them too.
Right. Yeah, and I mean, even on Facebook ads, like I pay attention. You see some more experienced marketers, the way they run their ads, they don't. I know some syndicators, I see the way run the ads with the IRR and the cash on cash, like numbers, right? And then you see some other more experienced, and they focus more on whether it's how the rich don't pay any taxes, or I saw one that says something to the effect of like how the oh gosh, I don't remember, but so like almost like how to double your money in, X years.
Yeah.
Yeah, like those kind of terminology.
Well, value add is a good one, and that's thrown out. And I'm still trying to wean us off of those, but the use of value add is the worst possible. I mean, because nobody knows what that means, like outside of our small little niche of a fractional percentage of the world, and that's used everywhere.
Yeah, that is a good one. So what would you say in replacement of a value add?
And we'll use renovation, tried and true renovation strategy, use rinse and repeat renovation strategy. We'll use improvements, our renovating improvements. We'll use any kind of terminology around that. That is just how if you like, how would you explain it to your grandma? I always go back to that, right?
Right.
The other thing that I brought up was to talk in stories, and that people get so busy rambling off data and numbers and jargon that they forget that people aren't going to remember any of that. And actually, how the human remembers things is stories. And that's why Jesus spoke in parables, and basically any religious leader always talked in stories, right? Because they're going to remember that. And so when somebody when somebody asks me a question, or I inquire where they're at, I tell them a story about somebody else that was in their situation that invested with me. And at the end of that story, they invested with me. And at the beginning, they had a hard time doing such and such, just like them, very relatable. And then we had a conversation. And during that conversation, I revealed these things, right? And then this happened. Or this person had something bad happen, like an issue being a landlord. But then they traded their assets in with me, and then they were better off. And you just start building a book of stories. I think I went into some, right, while we were at the $1 billion boardroom. But if you think in terms of, and you can't like start out a phone call, hey, my name is Patrick. So at 2 a.m. on Saturday, I was driving down the road. No, it's not like that. It's in a way where it's so fluid, they don't really get that you're telling a story.
Right.
Like when somebody said, how's your track record? Oh, well, let me tell you a story, right? We bought a property from an off-market guy. That means nobody knew about it. It was just a secret listing. Oh, off-market. Nobody really knows what that means. It's just a secret listing. So his secret listing was off-market. And that we just, because of our relationship, right? So by answering their question in a story form, then we got it. This guy was distressed. We helped him out, right? We're not predatory. Helped him out by closing quickly. Got a family office, put up all the money, and then we raised capital afterwards. We were able to close his now he was able to move on because he was actually sick, but we got this property at 27 million. And then we immediately started doing renovations, exteriors, interiors. This guy was old. He had forgotten about the tenants. There was a ton of reports of issues and problems. So we renovated, made it better for the tenants. We got the amenities fixed up and made it safer, fixed the fencing and everything. And then, by the way, halfway through the year, we started getting offers. And then we called our investor, hey, do you guys want us to sell? They're like, yeah. I didn't use exit. I said sell. And I said, yes. So then we went ahead and went through that. In December, we sold at 37 million, made $10 million in like 9 months. But then all the investors were going to have to pay taxes. So we actually told the investors, hey, do you want us to trade into the next asset in a way where you don't have to pay taxes? Notice I didn't say 1031 exchange. I didn't say, I said, do you guys want us to transfer your funds from one property to the next where you don't have to pay taxes? All but 3 of them said yes, but those had family problems, but the rest of them went with us, and then we traded them into 370 unit property in Texas. Tax, no tax free. So that was my response to what's your track record? There was like a ton of different value and come from and our core values and how we treat people and think about like residents and how we take care of our investors and how we're successful at it and then how we got through it. But I told a story. I didn't say, oh, this property we exited for 5 million. This property we did a 24 IRR. This property we had a 17% cash on cash. No, they're not gonna remember that. So
that's awesome. Love that. Do you have a fund?
No, I've only been active co-GP. And right now I'm actually trying something which is a little new. So my latest investment, because if you go to investonmainstreet.com, you'll see that what's presented now is actually a diversified energy investment, which we're launching an alternative assets division. And this is through, I've been collecting energy oil royalties through my family, and I'm diversified. But I just, for the longest time, didn't really give options to my investors to be diversified. And so we launched this thing. And as part of that, they're the direct operators in oil and gas drilling. And through my experience and relationship with them, I joined the board of the company. So I've been co-GP until I joined the board of the oil and gas drilling company in Dallas. And now I'm helping to, based on the success of the fund, it'll work out well for all of us. But that's quite a bit different approach, I'd say, than most of the individuals out there.
Gotcha. Okay. All right. In terms, so let me make sure I'm correct. So are you still open to co-GPing, co-sponsoring deals with others, or?
Yeah. So right now, I think that I'm always looking at new deals, always looking to meet new people and network. And I have signed on to quite a few loans, so I have my Fannie Freddie card, and happy to chat with anybody that is looking to co-GP. Right now, we're pretty much backed up. We've got a couple deals in the pipeline, so it wouldn't be anything immediate. And I'm a relationship guy, so a little slow to warm up, but a long timer. So if you wanted to do projects together, I'd be looking at doing the next 5 to 10 projects with a new partner.
Gotcha. All right, that's awesome. So you've been in the market for a long time. What's your crystal ball telling you now with this upcoming market, especially when it comes to multifamily commercial assets?
Well, what was very unique is when the whole time I was doing that, riding down the wave from the single family development, right, in the hardest way, there were other markets that were still doing well, other assets that were still doing well. In fact, you look at like Houston back in 7, 8, 9, and 10, it was going steady state, actually leveled off, and then it started going up again. Not every market did one of these, and not every asset type. In fact, mostly in multifamily B and C class workforce housing in those markets did fine. So if you're investing in those larger B and C class, and you're in workforce housing, and you're in a growth market that's tax advantage and landlord friendly, that will sustain that growth, I think you're in a good place. Now, if the deal's structured in a way where you're protected from rising interest rates with an interest rate cap, then I think you potentially can even win with inflation. Because right now, when we closed on that asset in Houston, we had a 3.5% interest rate, but our interest rate capped at 4.5%, and now we're getting paid every month the difference of the loan payment. So even though our rents are going up with inflation, our debt payment's not. And I have a whole article in Forbes on how we can win with multifamily when in a rising inflation and interest rate environment, if the deals are structured appropriately and in the right locations. So if you're going with a sponsor that's been through a downturn, that understands how the economic models can break down and how demand for the housing can shift, and he's kind of battle torn, and he's a much lower risk path now with low leveraged and fixed interest rates, then I think you can be potentially in a winning spot right now, especially in the last, call it last 3 months and for the next 6 months. Because the last asset we closed on, or we're closing on 2 weeks from now, we got a $5 and change million discount on that guy. And so, wow. It was insane. We put $2.5 million under asking, and when they came back to us, we went down another $2.5 million. And this is a San Antonio asset right on the inner loop, and we raised the capital up real quick. And but if you're a short-term flipper, you may struggle right now. But if you're a long-term holder and you fix long-term debt, or you cap long-term debt, you get plenty of reserves, and you're low leveraged, and you can ride it out, you can buy things right now at a discount, significant discount. And the data, the economics show that the value comes back. And if you're in the right markets, unlike a Phoenix or a Tucson or Las Vegas, where it could take 12 to 14 years for that value to come back, If you're in more stabilized markets like the Houston, Dallas is, may not necessarily Florida, but maybe a Jacksonville, Florida, some like Atlanta, it could take just a year or two for that to come back, especially in the multifamily space, especially if you're buying it under market significantly and you're driving value through renovations. You can have a lot to win. So especially the alternative, it's just leaving your money on the sidelines and not an inflationary hedged investment. So this will allow you to not only gain a return, but that will outpace inflation. So that's kind of my general, there was a lot to that, right? Did I overwhelm anybody?
Yeah, no, that's really good. So what's your big goal? I know you have this diversified energy fund or investments that you're moving into. Do you have what's your big grand, how are you going to conquer the world kind of goal or passion?
Become Javier. No, so basically where we're at right now is we have a baby coming in December, and
congratulations.
we're starting a family. Things are great for us. We like what we're doing. I'm full-time real estate. My wife is still doing feature-length animation for the large animation studios, and she loves it, production manager. Our goal right now is to do what we would like to do with our lives. We're at that point right now where we get to choose what we want to do with our days. And I think right now what I'm excited about is building out additional alternative assets for my investors. Because what I've found, and I just had this, for a couple of years now, we've been talking about wanting to launch this. And I brought in a partner who's multiple $billion-dollar guys, put together tens of billions in alternative assets. He's invested in 40 different alternative assets right now. And he's helped do a lot of, and so what we want to do is create this space where, because we're trading around these alternative asset deals like they're baseball cards. And they're very well known in like a small group of people. Even my syndication attorney, Dugan's invested in this energy deal right now. And so we want to build these other verticals where they're deals where we know who's invested and we know they're doing well, and we know the completely different verticals they give that run on different market cycles to build a more sustained wealth, cash flow, and wealth building portfolio that is recession resilient and tax advantaged. That is also in alignment with our core values, with the right kind of guys and the right kind of operators. And that's really, I think, where we're at right now is multifamily still at the core. But at the reality, even in my own passive investor guide, you can go to my website, download my passive investor guide. You're going to see right at the top, the middle class, high income, and ultra wealthy. The high income have 25% of their net worth in alternative assets, and the ultra wealthy have half. And you've got to be diversified in that. And most of my investors are completely hedged in real estate there. And so I'd like to provide the vehicle to actually, for my investors to achieve that kind of portfolio that I keep saying, no, you just need to go figure it out yourself. It just doesn't make any sense, right? So
that's awesome. Yeah, I like that. With your baby coming up, do you have any plans, or how are you planning to set up your baby so that way, by the time, do you know the sex yet, boy or girl?
We haven't announced that yet.
Okay.
So
right.
yeah,
yeah, are you doing anything to set up the baby so that way, she become a millionaire by the time they're born, or maybe like a few years later?
So you're saying my baby's already not a millionaire? Is that what you're saying? I'm just kidding. No. So I actually, so it's funny you say that, because traditionally not. Traditionally, I am not putting these super fancy wealth building strategies together. But when I was speaking on wealth building on a panel in Seattle at MFIN, one of the gals there was in infinite baking, and there was a couple other guys there. Tom Wheelwright. Yeah, I for some reason I can never say his name right. But yeah, he was there, and it was. I'm getting a little further into those long-term legacy wealth building vehicles, and I'm actually open to talking to anybody about those. But you're talking to an engineer, real estate guy, right? So I'm not super advanced in these like wild products.
Awesome. All right. Any last words of wisdom you'd like to, share with everyone on the call today?
Well, grind it out, but don't forget that you're dealing with real people, right? And I think that people are being authentic and transparent is so important, and they see right through you. And that's why I don't like using green screens. I just feel like I just want to be, I don't want to put on a facade myself. I just, whatever it looks like, the puppy running around, wife, whatever. And it's true. They did, and there's a bunch of noise in the background. I don't know. I just want to say being fully transparent. In fact, on my website still to this day, I have the original video that I created, which just tells my story. And hey, my name is Patrick. I come from this high-tech machine design, automation, robotics. We're taking down these great assets and and just, I'm not coming across as something I'm not. I'm just telling them exactly where I'm headed. They can jump on. And I think that the better you are at being the most relatable person that's trustable, understandable, will accelerate your growth faster than anything else.
That's awesome. All right. And so the listeners want to reach out to you, get in touch with you, get to know you more, build relationships with you. What'd you like to send them?
Yeah. So like you said, if you do want to set up an introductory meeting with us, we'll ship you a free copy of my Amazon #1 best-selling book. And there I am with the wig he was talking about on, and I got a chapter in there. So it's on the website, investonmainstreet.com. You just scroll down, but also check out the Passive Investor Guide. You'll see opt in for that. And if you want to reach out, it's patrick@investonmainstreet.com, patrick@investonmainstreet.com. And I did already drop my contact into the chat.
Awesome. Thank you so much, Patrick. Before we open up the Q&A here, just want to say thank you so much for being on this interview with me today. I've always learned a ton whenever I talk to you, and so I'm really grateful that you're willing to be on here and share your knowledge with all of us today.
Yeah, I appreciate it. Like I said, there's a ton of new faces, so I hope you guys take me up on the offer to jump on a call, and we'll be able to get to know each other.
Awesome.